and everyone.
Hey, Noah, how are you?
Good. So I don't see Braden joining yet. So if anyone else has a screen recording software, it'll be great if they can actually screen capture whatever Neil is going to show us.
I'm not presenting anything. It's all going to be a conversation.
Okay, then we are good. Okay.
Yeah, make it easy on you.
Okay, thanks.
And I don't want to give a speech for an hour, so I want people to chime in and participate as well. I think
Yeah,
that would
we'll do it the way we normally do, Neil. And
absolutely.
so
But I just want to remind people, don't be shy. It's okay to speak up.
I don't think that's usually a problem in our room.
Blow it out your ass.
So it's Tuesday, February 23rd, and tonight at 6 p.m. we have Neil giving a talk on planning trades and things related to unplanned trades and what they can do to you, and a little bit of management and all the rest. So glad to have everybody here. Everybody seems to really enjoy these Thursday night gigs. And just a reminder that I'm going to be down in Jersey the end of next week. So if anybody's in the area, we'd love to meet you. AD26 is working on something for getting us together someplace, probably up in Northeast Jersey. And that'll be on Friday, I think it's the 4th or 5th, something like that. So anyway, Neil, good to have you presenting, and always good to have you cooking. Want to hear what you've got cooking in the trading room.
All right. Well, thanks for having me. Hopefully this will be, helpful. But, what I want to talk about today is really having a plan, how to come up with a plan, trading without a plan. Because I see a lot of that happening in the room, and it never turns out well. Because if you don't have a plan, you're really having a just purely emotional trading. Everything's random, everything's guessed. It's not going to work. And trading's difficult, and it's hard to kind of come up with these things, and that's why the attrition rate's so high. Most people long term will fail because they can come in and they'll think, oh wow, it's easy, it's 2020, just buy calls, or but the market's really very rarely like that. Most of the times it's very challenging, it's very difficult, and it has to be viewed from a lens of risk. That's what really matters the most. So, we've been having this chart from that Scoob posted, the Jimmy chart, and it's interesting, right? It gives there's arrows that show up, right? Points up, it points down. But that's not a trading plan. It's literally an indicator. So when you look at it, and if you have that chart downloaded, which everyone should, I think Jody and Amar were looking at the 5-minute chart. So if you have that chart, pull it up. If you don't, it's pinned up in the trading room. And I think everyone should take a look at it. It's TradingView. You can sign up for like a free account for a couple months. So you don't need to pay anything. You don't need the data to, take a look at this thing. But what I want to point out is there was some good signals, this morning. It had 4 signals pretty near the top, but if you took some of these signals, you'd have to have a 10-point stop, right? And are you just going to buy or sell something and take that kind of risk just because you see an arrow show up? Like, it was good there. it was good near the bottom, but then in the afternoon, the last hour and a half, there's 1, 2, 3, 4, 5, 6 arrows you would have got smoked on if you took those. You're going to give back your whole day. So what you're going to need is some kind of trading plan. And these arrows would be what I would consider to be some type of setup. Okay. Which is step one. And if you're taking notes, write down number one is a setup. Okay. You want to see something usually on a higher time frame chart. A lot of my levels I post are off of a 120-minute chart. And then I want to see it go to that level. And I want to see it either fail at that level or go through and back test are typically what it is. Not so much the back testing. It depends on the level, but I really want to see it fail at those levels. And then I want to see some type of change in pattern. And I look for a lower time frame chart. Okay, so you can go to like a tick chart, a 1-minute chart, 5-minute chart, depending on what, how you like to trade, what your style is, how comfortable you are with the balance between having a tighter stop and getting stopped out more often. So you have to kind of figure out that balance. But I want to see a couple things. I just don't want to see a price go somewhere or one thing show up. So what? And most importantly, you need to know what you're getting out of a trade. Everyone focuses on entries, and entries are very important, but let's use this as an example. You can be as simplistic as do what an arrow tells you to do, right? And if you're able to manage risk and you know how to scale and you know how to, do the next thing, which is your stops and your stop management, you can come up with a trading plan. Okay. Those are the, primary things. But you also need to know what size you're going to use. Are you going to size up? Are you going to size down? What conditions are you going to trade in? What conditions are you not going to trade in? If there's certain events you don't trade well in, or your plan doesn't perform well, avoid it. If those numbers at 7:30 aren't your thing, don't do it. If the Fed isn't your thing, don't do it. You don't have to trade. You don't have to take any kind of trade ever. Okay. You also need to kind of figure out, most importantly, when you're looking at the coming up with the plan, is where are you wrong? Step one is your stop. Step two are your targets. And step three is your entry. Okay. You need to take all of those very seriously. Everyone focuses solely on the entry, and entries matter. That's really where the difference between making that extra bit of money, but you get paid when you get out of the trade. If it goes up 100 handles, it comes all the way back and you get stopped out for even, you made no money, even though it went 100 handles your way. So you have to figure out, all right, I'm going to have, let's say, 4 contracts. I'm going to sell 2 at, 4 handles, 5 handles, 6, 10, depending on what kind of time frame you're using. Because that's another huge thing. Know your time frames. You can't trade a 1-minute chart like you would a daily chart. They're completely different. And if someone's going to be doing something holding it for days or weeks, you have to understand that. And you have to, give that the time to play out. There's people that go months out. There's people that will play much shorter. But you have to know what time frames you're going to use. You want to know what time frame you're going to see the setup. You want to know what will trigger that entry. So you want to see what time frame you're going to use for a trigger chart. What conditions you want to see. So for example, on some of the fibs, I'll give you a very basic one, would be, let's say, a 120-minute chart is the setup. You want to go down to a 1-minute chart and look for a change in pattern, meaning you want to see a higher high or higher low, depending on the direction. And then you also want to see, let's say, the 8 and 34 moving average crossover, depending on bullish or bearish. Once again, depending on that, the stop would be placed below or above the prior swing high or low. Once again, depending on direction. Exits would be half the position at the 618, another at the 100% retracement, and then the 1262 and the 1618 would be the exits. Okay, the stop, like I said, once you hit the 1618, you're moving it up to break even on, let's say, the whole thing. Okay, and then you're going to start doing a trailing stop after that. So you're going to see, if you see a major swing low or swing high developed, you can move your stop there. And I know there's going to be liquidity runs, but if they get you, who cares? Because you're still going to make money on the trade. And you have this planned out before, which means you just have to execute. You don't even have to think. And you don't end up getting overwhelmed. You don't get over your skis. You don't make all kinds of errors and mistakes, or can't be greedy. None of that. Okay. So I know I just threw a whole ton out there. So does that make sense to everybody? Does anyone have any questions?
Makes sense to me. I think one of the things that I've historically gotten caught up on is, I have great plans, right? And I'll deviate from them and I'll do something that's sort of off script.
Mhm.
And oftentimes, that's where these sort of tilts come in. And I think one of the things that I know I've gotten a lot of feedback from other traders who have had similar experiences, that getting back to your plan and sort of recentering after sort of getting off of it is often, very easily said, not very easy to do. And I think that that's where a lot of people get hung up on these trading plans is, everyone has a plan until they get punched in the mouth, right? The famous Mike Tyson quote. And I think that it really applies in trading more than people like to think. How do you sort of get back on your plan after, you've made a mistake and you've done something stupid? What's your sort of look back, and how do you recenter on that?
I mean, you just have to do it, right? Like, you don't really have a choice. If you're not following your plan, what are you doing? Like, what's the basis of your decisions? And if you have an incomplete plan, like, what are the basis for the rest of the plan that you haven't thought out? So more than anything, discipline isn't easy, right? It's not hard. It's not simple to just say, okay, I'm going to be very regimented and I'm going to just be truly robotic, right? We're all people, we're all humans. So one thing you have to do, and I think it's critically important, some of the homework I'm going to leave you with, if you will, is you have to back test your strategy. You have to go back and see how it would perform. And, you have to have really tight conditions on your plan to the point where you can literally point at a candle and say, I would exit here and I would enter here and I would exit here every single time. So if you go back and you back test it, then you can actually have faith in your plan, right? Because it works if it has a positive expectancy. So if you have a loss or you have a few in a row, you know that it's part of it, right? You're not supposed to make money on every trade. You're just not. We deal in probabilities. You don't even have to be 50-50. What matters is how often are you right and how big are your winners versus your losers. So the whole key is, why you buy low and sell high is you're really trying to buy close to where you can define your risk and sell close to where you can define your risk. And at those extremes is usually the best place to do it. And you have to be comfortable with that. But more than anything, look at it, your plan, come up with it. And if it works and it tests well, follow it, trust it. Because otherwise, what are you doing? Literally, what are you doing? You can't just go and copy people, right? It's not going to work. You're never going to get their entries. You're never going to see what they see. People leave, if you're following if you all you were doing was following JD, for example, right? And he goes to get this job. Now what? It doesn't work. You have to do that. Come up with your own plan. It has to be yours. It has to be you, but you have to follow it. It's like anything else. There's protocol. You don't go, like Dan, you're at, the trains, right? Do you just like hop in and do whatever the hell you want? Like you can start it up, right? Starting it's easy, but like, you have a protocol, right? There's things you have to do in order for it to be successful. And what happens if you skip steps? Yeah, and it's true with like every single job, right? Doctor's just not going to go, "Oh, I'll cut over here today." It's very regimented. It's very, very specific. All right. Now, we also have to be somewhat flexible and be able to adjust, but you can't just think that the market conditions are going to be conducive to that most of the time. And if you're not aware of when it's really that time, just do the same thing over and over and over, because it should make money if you've tested it and it works. So that's really it. It's kind of like if you're an alcoholic or you have a drug problem, right? You just have to do it. People can say, "Oh, you should do that," but you have to want to do it. And you have to be willing to give up whatever, desire you had. And even if the desire is there, you just have to have that control or restraint in order to say, "I'm not doing it." It's just discipline. So if you fall off your horse, get back on, but don't fall off your horse. Stick to your plan, especially when that makes you money.
Just it for me. I've found that emotion is what kills my discipline.
Mm-hmm.
And I've taught myself to do a number of difficult things in my life, and I've been very disciplined about it. But for some reason, I can't get past. I'm a very passionate man, and when I'm in the moment, the competitive thing rears its ugly head, and the eyes roll back, and I'm a shark in the water, and I can't turn it off. I've tried for quite some time now, and I was wondering if you had any tips or anything, other than just going full on.
Why haven't you turned it off if you know it's not good?
That's what I can't figure out. I mean, in all my other endeavors, I've been able to tame the beast, but for some reason, I don't know if it's the money thing
Well,
or
what's
what
the
it is.
structure that you have? Like how do you, do you have a full trading plan?
Yeah, I write out every trade before I get in it. I'm to that point where I have my stops, target, entry. I have an idea. I'm I will have a resting order, for 15 minutes before it goes to my planned entry.
Okay.
I'm trying to get to that point, and I suck at it. But even then, as it's approaching, I find my emotions rising, and I can't be I can't disengage from it. Is the best way I can describe it, and I don't know why in this instance. For
I've
all the other
had
things that I've
very,
done.
very similar sort of experiences as someone who's highly competitive and a perfectionist. And, one of the things that's really helped me is going to something that's not, you know, it's if criteria 1, criteria 2, criteria 3, and criteria 4 are met, and it's not about because I for a long time have traded support and resistance and levels, and that was successful, but very rocky and up and down, and emotions can get involved in that too. Where if a level breaks, you're like, oh, it's just it's a fake out, or you sort of start to um, think about it too much, right? And one of the things that I've found to be helpful is trading sort of, and this is very cliched, systematically. And when I say that, is what I've been doing lately has been the most helpful thing I've ever done in trading to myself, because it takes complete sort of emotion out of it. I stopped watching Apple and everything, really. I literally took almost everything off of my screens except for what I'm trading. And it's 4 criteria. And if those 4 criteria aren't met, it's a no trade. And that has helped me a lot, because so I'm not waiting for a level or a price. I'm waiting for my criteria to be met. And if my criteria are met, then I can take the trade. If they're not met, I'm not taking the trade. Now, where I get into trouble is I deviate from that. And that's always where I've gotten into trouble, is I deviate from that. But when I follow that, that's when I've been the most successful.
Hey, just to add to that, Crater, you said you have levels, you have targets, right? So if you have that written out, and you have your stop set, just walk away from your desk. Set an alert on your phone or something, and when you get filled, either your stop or your target, you come back. Don't even look at it. That's your plan. Stick to it.
Yeah, there's two things. So one is to go on Scoob's comment. There was someone my dad was listening to, trading guy, and he said, like, best thing you could do is put on your trade and then go to Walmart. Just like get up and go away. Like, don't
Yeah,
touch a damn thing.
yeah.
You
You're gonna
know.
fuck it up.
The second thing is, if you're not really trusting your plan, then you need to test it more. Or if it's the emotion, you may want to just go and trade on sim for a while. Okay. And help yourself get mechanical without having that stress of the money or the fear of loss, or whatever it is. And then the other thing was just size down, because if you're over leveraged, or even if it's not what most people would consider over leveraged, if you're uncomfortable, you're betting too big, you're sizing too big, so size down. And if you feel like you really need to retrain yourself, then do it on the sim account. And that way you're not going to worry about losing money. You won't lose money because it's on sim, and you'll be able to practice being robotic, getting mechanical, and like getting those reps, if you will, in a much nicer environment, then you can step up, and then you'd probably want to go to like an Apex account next, where your loss is very limited, but you have to treat it very seriously too. You can't just say, F it, I'll do whatever, and then go from there. But you have to detach the emotion that's preventing you from executing your plan. Because if you have a plan and then you're like, I'm not going to do it, it's like making dinner and then just throwing it in the garbage, right? You have to follow your plan. So I don't know, maybe test it if you're not trusting it. Those are really all the things I could really think of.
Thank you.
Oh, you're welcome. Anyone else having struggles when it comes to coming up with a plan? You have questions about any of the components of the plan or how you could look at it, like anything?
Neil, thanks again. This is Amar, and my middle name is Struggle. Like literally, that's all I do is freaking
Okay.
struggle all the time. I'm transitioning from day trading to trying to find longer term trades that will not force me to be at the computer all the time because it's just not going to be possible for me in the next few weeks.
Okay.
But something you said reminded me of what something Dan had mentioned earlier is Dan had said something along the lines of if Mancini gets hit by a train, like what are you gonna do? Like where are you gonna get your levels from? And I thought the train thing was funny, but it's true. I mean, I'm something I'm very good at is signing up for subscription services. Okay, so I've been around that boat. I've tried a lot of them. But ultimately it always comes back to like what kind of skill have you actually learned? And hard truth for me was I didn't really learn much. So I'm trying to figure out my way forward in this after 8 years of actually trading. Question is in terms of playbook, I'm what I've been doing recently to try and figure out the Jimmy algo, which I think can be really powerful because nailing these top ticks and bottom ticks is really something. Just it's a beautiful thing. And what I found is adding Mancini levels to that chart helps me make decisions a lot, and then use those triangles that pop up as little signals, confirmations, decide when I want to size up. Also keeping in mind the outer bands are really important. So if I get a signal in one of those outer bands, I'll try to, maybe I'll take a shot somewhere. My problem is scaling out. So if I just want to take a small trade, I'll I'll just take contracts. When do you start to scale out? I mean, for example, if you look at today's chart, today's Jimmy chart, that bottom ticket it hit before the afternoon today. I would have been out of that trade once it hit that gray line, the first one. What would you have done? What would you have done differently, or what would have kept you in it? What kind of signals would you have looked for to stay in?
Well, did you see what made you get out of those trades, first of all?
It's a great point I think you're making here is sometimes I'll size too heavy, so once I see that green pop up on my account, I'll start getting really antsy, and that's a mental thing that I'm kind of working through. I just to have that patience to let this thing get to fruition, get to completion, because instead of having a 10x trade on my hands, I got out at 30%, something like that. So it's mentally maybe I size too much. At the same time, just referring back to the signals here, after back testing it, I'm seeing that price will usually resolve itself from a bottom tick signal at least up until that gray band. The chances of that happening are pretty good in your favor, but for it to go to basically scream another another 30 points up, that's where I was just completely lost. I say, okay, I close the trade because I don't know what to do here.
Okay, so you base your exits on the chart?
Yeah, I do. I mean, and you know, and
So
then
like, if you have this position and I show you a bunch of different charts, you'd be able to point where you would get in every single time and where you would get out every single time.
no, I wouldn't.
That's the problem.
I was putting Jimmy as our example for this specific question, but you're right. Yeah, no, I would not.
And I think that's where a lot of the emotion will start to be able to creep in. Because look, I've made every mistake. I've made mistakes that you haven't even dreamed of and didn't even think were possible. Trust me, I've screwed up more than anyone in this room probably combined. So, when it comes down to it, you need to have all that planned out, because
No.
if you don't know what you're doing when you get in a trade, why are you getting in a trade? How do you know that it works? How are you going to back test it if you don't know what it's going to, where you're going to get out? Right. So when you look at this, where are you wrong? Right. When you back test, like on average, for the first thing I'd look at, okay, is on average, how many handles against, does it go against me? That's number one. Define where I'm wrong on an entry, and I'd work from there. Right now, I have to figure that, let's say it's 10 handles, right? Now I know that I have to try and scale to recoup that risk, uh, you know, and that's the whole point of the scale, right? Is to take your risk out of the trade. Okay. Then I'd want to see, like you said, if they're reliable targets, like the VWAP, for example, right? I'd probably use that as a scaling point, and there's different types of trailing stops that you could use for your runner, right? And that way, when the trend continues, you're not getting out. But until you decide where you're going to get out in a reliable fashion, then you're guessing, right? And if you know where you're going to exit and you think about your exits that much, which, like I said, you want to scale. Like you hear Gov say quick scale how many times, right? And Rogue will be in a trade, right? He's scaling, I'm scaling, and then I'll say ABS, always be selling, right? Notice the pattern. Those are probably the two most successful traders in this room. And it's an incredible blessing that they are here. It's amazing to have that kind of knowledge. Trust me, I'm like the stupid baby of the floor traders. I caught the very end of it. These guys are much greater, much smarter, much more experienced, better traders than me altogether. And you hear what they preach: scaling, scaling, scaling. Why? Because it's risk, right? So first thing, know where you're wrong. When you back test, know where your stop is. If you're gonna get in a trade, you have to know how much heat you're gonna take, right? And then you also have to know where your targets are gonna be. And then that way you can figure out what's your risk reward, right? Because if you have to risk, say, 10 handles to make 7, you probably don't want to do it. If you're risking 10 to make 30, that's worth it. So focus on where you're wrong, focus on where you would scale, look for those reliable targets, and most importantly, You don't have to use the same chart to exit that you do to enter. The conditions to enter a trade and exit a trade do not have to be the same. And they don't even have to be the same for individual, contracts. So you have 4 contracts, right? You can sell 2 at a specific price level. Say I'll sell 2 at $8. And then I'll sell another one at the VWAP. And then the last one, I'll use a ATR trailing stop on a 3-minute chart, whatever. Okay. They have nothing to do with entering based on Jimmy's chart, right? So be curious, like Scoob said the other day, which was an incredible point. And, you can use this as an entry chart, not just as an exit, or you can just use it as an entry chart. You don't have to use it for exits as well. So I think that's probably what I would suggest as far as things that could help you, Amar.
Yeah, and to add to that, I think like there's 3 main components here, right? Like just to reemphasize it, like you can have Jimmy's chart to enter and like set your risk however you like based on where the triangle is painting and like the high of the bar and whatever extra risk you want to put on, or however you want to put your stop. And then you could have your scales set to either Mancini levels or VWAP or the Fibonacci's that Neil was describing. And then you also need to have another condition that says, even if I have runners on, like this trade could be completely invalidated by one single condition. Like it could be something like simple as MACD is becoming bearish on like a 3-minute time frame. So you exit everything. But you need to have something that like cancels everything, and then also instruments for scaling and stuff like that, if that makes sense.
Yeah,
No,
absolutely.
that made a lot of sense to me. Sorry, guys. That did make a lot of sense to me, and I think I need to add a level of just to be a little bit more dynamic in terms of exiting. It doesn't have to be the same as the entry. Makes complete sense.
And it can be the same. It doesn't have to be different, by the way. But I'm just saying, and it doesn't have to be, there's a lot of flexibility, okay? But use all the tools that you have. And like Scoob says, you really want to look for reasons not to get into a trade. And if there's something that invalidates it, you just walk away. Yeah, no FOMO, no regret, not like, oh, I wish I would have done that. Like, no, it didn't fit your plan, so you didn't touch it because it's too risky. Anyone else have any questions? Anything else?
I just wanted to share, like, I think my problem is, like, if my numbers don't hit, like today, XPX, I had 407. That was my first exit, and it kind of got lost at that trade because it bounced back up to
Sorry, I
40.
joined late, but I have a question. I
Yes.
apologize if it was covered, and I hope it's on topic. But maybe if you had
Hold on a
advice on,
second, Vlad. Vlad, hold on a second.
Yeah,
Kara was
Carol,
talking.
but you can go next, Led.
Like I get frustrated when my numbers don't hit. Like on that first leg down, I calculated 407 and it just hit 408, and then like I second guessed myself, like, oh shit, maybe I'm wrong.
Well, you are going to be wrong a lot because that's
Yeah.
part of the market, and the market doesn't owe you shit, and it doesn't have to go to your levels if it doesn't want to.
Yes.
Yeah,
So-
guys, hitting numbers is like really hard, like very precisely. That's like the biggest grift that futures traders make. It's like, oh, my level hit perfectly. Like, who cares? You got lucky. Like this E-mini is flying around like 4 or 5 handles. NQ is doing like 20. It can go
Right.
anywhere, but you gotta like just look in that region. So maybe expand your zone if your levels are. It's not really a level. It's more like a region to me.
Right. And I think like I pre-jump, like I front run trades instead of patiently waiting.
Yeah, that's common.
I think we all do. I think we all do that.
Okay.
It comes down to a simple thing, really, right? Have your plan, test it, believe in it, and have the discipline to execute it. You're never going to be chasing perfect, right? Like Scoob says, like if I have the View app as a target, I'm always front running it by a few ticks. I don't care. I don't need it to be perfect. I need it to be close. If I'm good on the thesis, that's good. I'll have my targets set, but they're there for a reason. And the reason is because you test them and that you found that over time, doing that over and over and over provides you a positive expectancy, right?
Yeah.
And
Yeah.
make money, then good. If your plan doesn't make money, keep working on it. But you have to test it. It's so important because otherwise, how do you know if it works? And if you're risking all your money, then you're going to have emotions come in right away. And you're not going to execute it because you don't trust your plan. Trusting a plan is something that's so underrated. If you have to believe in it and that's why you'll execute it. But don't try to be perfect.
Yeah, just to piggyback on this, like, don't be perfect comment, like, your job is not to be perfect. Your job is to make money, right? Like, yeah, sure, it feels really good and you bottom ticket market or top ticket, right? But if you missed it by a point or two, it's gonna really suck. You're gonna feel like, oh, well, I kind of almost had that right. But don't focus on that. So if you think about things in terms of like a probability curve, right? You have like a normal distribution. Perfection exists on the tails, right? It's like 30% of the time you can get something pretty good, and then 70% of the time you're like in the middle, but you make money. Where money is made is in that fat middle. If you're on the tails and you keep trying to be perfect, well, the other side of the tail exists too, and you're going to lose a lot. So just focus on getting wherever your entry is, extracting max value from that, and not bottom top ticking markets. I'm going to stop posting bottom top ticks too, because I feel like it's a big distraction. It's about making money, not about saying, oh, I put the lid on the market or I bought the bottom. It's like a bad habit that I'm trying to break myself, and I think it's pervasive in futures traders.
I mean, I put levels out there as areas to manage risk, for heading towards those levels, or levels to watch for failure. And that's where you look at, I look at a lower time frame chart. If I see it hit the number and it's failing there, that's where I want to see a change in pattern and some other conditions, like a moving average cross or an ATR cross or whatever, a Jimmy arrow, whatever it may be. But does that answer your question, Kara?
It does. It does. Just in the morning, it was just a little hectic. I got emotional, just like everybody else, trying to work on it.
Yeah, and that's the whole key, right? Is like, I mean, it's the theme. How do you get rid of emotions in trading? Well, think of everything you're going to do before you get in a trade, and then just follow your plan and prove it to yourself and commit to it. Because how often are you like, man, that was such a great decision to do that dumb shit? Like, how often does anyone be like, oh, wow, like I just hit the reverse button 5 times today. That was amazing.
No, you usually go and yell at yourself for a little bit.
Yeah, I mean, has it worked for anyone, like even once? It doesn't.
Oh, it's worked, and that's why you keep doing it. Actually, probably for me, some of my biggest gains have been doing dumb shit. And that's sort of where you get that, like, you're being affirmed of that, hey, doing dumb shit does work once. And probably that's the worst case scenario, is when you've done dumb shit and it does work.
Mm-hmm.
And I think that's in trading where a lot of people's, I know mine for sure, my biggest gains have been when I've done something dumb and it worked out in my favor.
Yeah, until you give the towel back.
Yeah, and then you get that positive affirmation that, hey, I could do that dumb thing again and maybe it works, but it's that sort of it doesn't. It rarely does.
It catches up at the end.
That reverse button is the worst thing in the world when you're tilted.
I think there's a way to remove it actually.
Yeah, I would like to get that thing off my screen. So
Let me look at it right now.
But it's kind of the same thing as like if you see a gun, you just don't grab it loaded, put it in your mouth, and pull the trigger, right? Like just because it's there doesn't mean that you do it. And if you're tilting, where is that in a plan?
You are such a lightweight.
I'm a lightweight.
Racket and jacket.
Tilting comes when the plan fails and you're spun. That's where that comes from.
Well, yeah, trust me, I've been there. Like I hit that button myself a few times. I'm not immune to any of this, right? It's part of being a human. But I try not to be a stupid one as much as possible, and I know that's the stupid button because it's there for like an event, right? Like,
and I guess that was my question earlier. That was probably poorly worded. Is everyone has done these stupid things where they've hit the oh fuck button and then it's backfired over and over again. And how do you snap? And this is for everybody, and maybe it's even something that you think about yourself, is how do you snap yourself out of that sort of negative feedback loop? And for me, it's I need to go away from the screen. That is the only thing that will work for me. It is I know I need to get up. There is no trade that I'm going to take that is going to be productive. And it's forcing yourself away from doing stuff like that. And I think that that's a conversation that is another good one. Is you have that plan, but when you do something stupid, what is it that you do that's part of your plan that you need to do to get up and get yourself out of it and back on task?
Well, if your plan is stupid, you need a new plan. Okay? That's number one, right? You shouldn't do dumb shit after you execute, in the middle of a trading plan, right?
I can probably add in.
Here, go for it, David.
I woke up at 3 a.m. With bright-eyed, bushy-tailed. I was like fired up for the day. I made a couple of nice trades. And then all of a sudden, the sun rises, and I see this freaking tree on the side of my house. And I'm like wondering how the hell it missed my house. Missed the basketball hoop, missed the play set, missed everything. That is how my day started. And then I saw Dan had a good idea threw on my radar, UV, and I had my levels, and I agreed with the level. I jumped in. I didn't get my scales right away. It was like the furry on the back of my neck. It's like, that's my go-to. I don't get the scales. And I let it go a little bit, and I added to it. I know it's a range, and I'm totally fine with that. But if I don't get those quick little scales, I know I'm dead. I'm dead wrong. Time to reset the clock and do that. I did not do that. And further, so we've been going through the ranking and all that. I'm more of the larger time things. I look for the wide ranges. And then and only then do I go through, which is what I'm hoping to learn more, because I think Dan is doing really good work. And Scoob's got another program too. But I totally took my eyes off of what was going on. My go-to is the wider ranges. I look at what's going on with the Russell, the NASDAQ, the leaders. And all of a sudden, I got wrapped up in the goddamn Renko thing the last freaking couple of days. And I took my eye off of what has made me a lot of money over a lot of years. I'd rather rephrase that. I've made a lot of good decisions off of more the macro around the edge. I think that's probably that's a better way to put it. I don't want to delude people. Anyway, so honestly, I was red for the day. I came back close to neutral, but I got off my game, and I've been doing this a long time. But I'm trying to learn new things to kind of refine certain scenarios. So I think that's also a good thing to throw out to people that, unfortunately, when you come into the business, it's like you don't know who you're listening to. It's like, oh, they're larger time frame guys. They're, 1 minute guy. It's like, I've been paying attention to the ICT guy. I definitely, a number of the things that he talks about resonates with me. I mean, totally get it. But you know what? I'm really not interested in throwing up a 10 or 20 lot, within a 2-hour period of the day with the idea that I have a high probability, making 10 or 15, 20 grand. And then we kind of run that out. That's really just not my gift. So I look forward to learning from him and everybody else's experiences. But candidly, in the last 10 days, this ICP and the whole Renko thing is taking me off my game. So I've been chilling. I'm looking forward to my son's got a senior baseball season, and I'm going to be out of town for 6 weeks for the weekend, and I can't wait because it's like I'm at a different learning platform. I've consistently made money for 30 years trading the markets. Anyway, sorry, I'm too long.
No, you're not.
No, I think that's really really important because what works for one doesn't necessarily work for everybody, and I think that that's really really an important thing is that you need to stick with what has worked for you and what does work for you and how you see things, and just that deviation, right? It does throw you off. And you're probably the best one I know of resetting because you reset the same way I do, which is you need to get up, walk away, and sort of go away, you know? Um, and people need to find their own process for doing that and trusting in that process. And that needs to be part of their trading plan, in my opinion, is when they make mistakes, which are going to be inevitable, what is the process for getting back on plan?
Yeah, I think, when it comes to what Gov's doing, there's a fine line between tweaking your system and then managing the growing pains, and if you have something and it works, you really don't necessarily need to change it. That's it's the fine balance, right? Because you always have to be a student of the game. You always have to be getting better because the market's always changing. What's working now is working, but that may not be the case in 6 months, 2 years, or whatever. Okay, so you always have to be studying, always have to have your eye out, but you have to know, number one, if you're going to change things, you're going from something that's almost automatic, right? You can get, and you really should get to the point of being on autopilot. And if you don't think that can be the case, do it on the simulator. Take the stress away, take the money away, and just focus on, your chart, your price action, indicate whatever it may be, but work on your system. But, you have to execute it well, and there's going to be growing pains coming up with stuff. you know, and
So
pains me.
Neil, on that point,
hmm
you and only you have reminded me that when we work on different strategies, until you put yourself into a payment account, a cash account, you're still stuck in a sim account with no blood result. You're not feeling the pain. You're not feeling where the edge of the line is with a trade. So I think for a lot of people, it'd be beneficial to understand it's like the apex and top step accounts. Use those. It's like, I mean well, actually, you know what? Get in the apex account, put some real money in this, and just keep it small. And you have to feel the pain. You just have to. Right? And that's stuff. Right? You know, how much capital do you have? You know, anyway.
Can I just jump in, guys, quickly?
Yeah, absolutely.
I love hearing this discussion. It's fantastic. I just have one viewpoint in regards to all these things we're talking about. You know, all these guys in this room have a great system for themselves. Like Scoob has, you know, his system. Aaron has, you know, his system and his, you know, new charts, and then there's ICT and all these things. I will just say, do what works for you. I think there's a lot of people trying to chase the rainbow with what everybody else is doing. Like I use standard deviations. I'm not sure, you know, everybody does, but it works for me. So find something that works for you and use it. Like beat it to death until it doesn't work anymore.
I'm sorry, who
But
is this?
it's JD.
Oh, JD. Oh, okay.
Yeah.
All right, cool.
Yeah. So find something that works. Like I can't attest to Scoob's stuff working or someone else's stuff working. I've been using my system for 4 years now. I know it works for me because I've been sitting there watching the ticks and what the patterns are and what the behaviors are. So if you're going to put money behind the trades, make sure you understand what's going behind that trade. Like for me, I'm not just getting in because it's above a 20-day moving average. I'm getting in because the level 2 price action tells me that there's a buyer. There's flows coming in at important points. There's like a 4-point system I'm using trying to get the best edge here, right? And it won't work for everybody, but there are certain things I'm looking for that's going to make me jump in or not jump in, and it'll work one time and not the other. But if you're putting real money in, just back test the data, make sure it works for you, because what Scoob or somebody else sees on their, you know, on their indicator, you might not see. And when they get out, you know, it's too hard to say when they're out, and you know, it's going against you the wrong way. So if you're going to put real money, make sure you're putting in the time to know that it works for you. And if it doesn't, don't use it. Like I just see a lot of guys chasing the rainbow with all these different indicators, right? Like you know, even like I'm talking to Dershel, and now ML is using standard deviations and Bollinger Bands. Sure, but you have to understand how they work behind the action, and you have to give it time and testing the different patterns to make sure it works for you. If it doesn't, don't use it. So I'm just saying, if you're going to put your money behind a trade, make sure you have something in place that works for you, instead of chasing 5 different indicators. That's all I'll say in regards to indicators. Like I look at somebody like Rogue, who's a great trader, and when he posts stuff, man, I look at like, yeah, why didn't I see that? It's so simple, right? There's no cluttered anything, right? So, you know, just whatever, it's your money. Just don't listen to internet, you know, avatars like me who are doing this or whatever. Make sure it's working for you because it's your money. That's all I'll say. And back
Yeah,
test your data.
JD, 100% agreed. This discussion really is about, you know, it's kind of the genesis of it is I think for futures trading, most people don't even have a system. So 100% agreed. You know, you guys have your choice of what you'd like to explore, but to JD's point, you know, whatever you choose, make sure you do exactly what he said. Make sure it's back tested. Make sure you understand it. Make sure you know your stops, your targets, etc. Study it, but have a system. This is the point of this discussion, whatever it is, and make sure it works for you. So yeah, thank you, JD. Agreed.
yeah, 100%. And have a complete system. You know, everyone focuses on entries. You know, Focus on the exits as well. Know where you get out. Make your exits systematic, repeatable. You know, because what's the definition of science, right? Proven and repeatable. All right. Now we're going to go into statistics, right? Which is probabilities. You know, that's really what we're dealing with. And that's why you have to backtest it. And in order to backtest something, you have to have a plan. Okay. Because without a plan, what are you going to do? Just kind of say, oh, well, this time I'd get out here like 4 ticks from the bottom. Like bullshit. Right? How are you actually going to backtest if you have no idea where you're going to get out of the trade in a repeatable fashion? You know, what kind of data are you collecting?
Yeah, and especially in this market, like this market is the definition of insanity.
Mm-hmm.
So if you're, and this is why, like, you know, when I'm talking to guys, like somebody asked me about, oh, whatever, standard deviation. Yes, I use it. What I'm trying to tell them though is that just because one wick works one time doesn't mean it works the other time. You have to look at level 2. You have to look at price action. You have to look at who's coming in where. What strikes are they attacking? There's a whole bunch of things. So somebody just looking at my chart cannot understand what's going on behind the scenes. And the same thing for you, Aaron, same thing for you, Scoob, same thing for you, Neil. Like everybody has their own system of couple of data points, right? Smooth has his own charts too, Fibs. Like everybody's looking at a couple of data points and not just one point. And I think that's what people need to understand is test your data points, but have more than one thing that is making you get into a trade. Like personally, like I know, you know, when Anthony mentioned the coin, for example, the coin trade yesterday, great, you know, it more than doubled, but it was too tough for me to get into because the IV juice is too much for me. But it might not be for somebody else. So just make sure you know why you're getting into the trade. And if you do, then hey, you put your money behind it and you make money. But just ask why you're getting into that trade. You cannot just go by, well, this is what I see, or this is where we're in the chart. You want to see actionable items. And if those actionable items all align, then hey, we put our chips in and we make it work. But you have to know why you're getting into that trade. That's my only thing when it comes to these discussions about trades, because you know, it's like a lot of times like people are just waiting on other people to say something or this indicator or whatever. No, understand why you're getting into that trade. If you can't understand it, other than for everybody else, but for an actual trade that you're putting your hard-earned money behind, make sure you understand why you're doing it. Why are you you're putting money into this trade? And it'll make
And
you a
I
better
think
trader.
I think the good starter off of that was awesome. Look at the charts, look at the different time frames, look at what's going on. Where are you wrong? Where, if you want to get long or short, where are you wrong? That defines your risk.
And why are you getting in? Like, if you know, I use standard deviation. Like, if it goes above or below, what? That's part of a setup, right? You know, JD uses flow. He does. You know, I have different things I look at, but the point is, I need more than just, oh, it touched this price. So what? It touched the price. You know, I need to get it to the point where I see I need more, right? I want to see patterns change. I want to see certain thresholds crossed where I think certain action will take place, right? So have more than just it touched this or an arrow showed up. This golden arrow isn't going to make you a millionaire if you don't have a plan around it and if you don't frame that plan around risk.
Yeah, absolutely.
Anyone else have any questions, comments, concerns?
Neil, it's Rich.
Hey, Rich.
I think that one of the most amazing tools that we have available to us, and it took me forever to finally figure it out on my own because nobody really seemed to want to answer the question a year ago or so as to what the best charting platform was. And I tried a number of them, and I really think that TradingView is the shit. There are just so many features in here that we'll never ever master the entire platform. But from being able to look at your risk rewards with a simple tool, being able to just do all manner of drawing. I'm a visual guy, so I need all this shit. But I can't say enough good things about this platform. And I understand, and Dan does too, that supposedly Apex is going to be bringing their product onto TradingView. And that's something that's really interesting because I hate using Ninja. But if anybody has any questions about TradingView, if they don't use it, I'm happy to do my best to answer them. But there's just so much good stuff in there that can help you become a better trader.
You know, it is a good platform. I mean, I literally just started it today to test out the, that Scoob chart with, I'm trying to come up with something more comprehensive. And it's fine, but, a platform's a platform. You're not going to switch to a different platform and become the best trader. It's kind of like, and it's like golf. A lot of times the worst golfers have the best clubs. So it is an amazing platform, but you have to figure out, what you're going to do with it, right? And sometimes you can go too far. Like I got way in deep in that used ThinkScript a while ago, and I looked at a million different things. Looking back, I learned a lot, but there's only a couple things out of it that I found any use in, because most of it's all the same bullshit. It says, "Oh, do this and that," but how the hell do you get out of the trade? Where do you
I
find
find
your risk?
TOS to be very clunky and it uses an awful lot of resources on your machine.
It's just garbage. It is. Toss is the same. It has pretty charts, but it's a crap
That's what
platform.
I'm talking about. TOS, I think it's a shitty platform.
I don't trust it for trading. No way, no how.
The one thing there is about
but it
sort
doesn't.
of a lot of these platforms, sorry to interrupt, but a lot of these platforms is there's parts of your trading, and I'm talking just for the futures people mostly because that's really the majority of what I do. There's a lot of stuff that I can automate for myself, like scales. You'll always see me saying I'm taking half off 5. That's because my sell at 5 points is already loaded in when I take that trade. It's so doing stuff like that can be really helpful for yourself. There are times when I adjust that and put it to 6 points if my 6 points is actually at the level I wanted to sell at, or I can, or 4 points or 3. You can adjust it sort of on the fly, but doing stuff like that where you automatically places your stop, and it automatically places at least your first scale, because I don't have it place any second scales for me, just my first. Um, that can be majorly helpful in sort of sticking to your plan, because half of that stuff is already preloaded for you. And I think that, and correct me if I'm wrong, Rich, that's sort of what you were getting at, is that a lot of this stuff you can do right in TradingView.
Yeah, that's right. You can. I mean, you can set up strategies in Ninja as well. They're not as easily adjusted, like when you're in a trade.
There's a learning curve there.
Yeah.
I think they're very
That's
easily
the
adjusted, but there is a learning curve.
But having your stops in and your entries, when you enter the trade is really a requirement. You have to view it that way. And, if you do need to adjust your stop and everything, that's something that you do right away when, because that's part of the plan that you entered, with. And you should have some, you should have your scales and, your targets, which you can always move. But you need to have that in there, and then you have to leave it, or if you got, say, your scales hit, then you move your stops. Those are where you really start getting into a full trading plan, because if you get scales, are you just going to leave your stops where they are? If it goes and you're on your runner, what are you doing with your stop? So each thing has to really be thought out in great detail. It's if you have emotion, you don't have details, or you don't have commitment, or you don't have faith. Those are what screw people up.
Hey Neil, it's
Hey.
Smooth.
Hey, Smooth.
Hey, I just thought I would, kind of add a couple things that I think have helped me. It's getting back to working with strategies that sort of tried and tested, and it's your bread and butter. And that's where I found Apex has been helpful. And I kind of personally prefer not to trade in a sim because it kind of takes the emotion away, and at least even though there's less money on the line, trading like your own cash account. I kind of have, I think, like 5 Apex accounts now, and I have my bread and butter, which is typically like harmonics, Fibonacci's. That's kind of my bread and butter that I've been doing for quite a while. But some of these other strategies, I basically move over to one of my other Apex accounts and sort of backtest them against each other to sort of keep a rolling, I guess, competition sort of against each account to see which performs better. And that's kind of how I manage sort of day to day.
Yeah, I mean, it's a great point. Like, you brought up, and like Gov said, like, it's different when you have skin in the game. Okay. But a lot of times I think people just need to work on the very basics and just learn to actually, when this happens and this happens, I press the button. And by getting those reps, when you do get into a situation where you do have skin in the game, you're going to press the button and you're going to let the process play out because you've seen it in a safe environment. And the key is when you switch, and you should, like, it's different, but if you just have to make sure you're not getting in, over your skis, because you can end up spending a lot of money if people are blowing accounts and they're just getting chopped to hell. So sometimes I
That's
think
what
it's
Daryl likes.
you need the baby steps, and there's nothing wrong with putting yourself in a safe environment to learn. And there's nothing wrong with using an Apex account as a bridge to, start trading your own cash accounts. So know where you are in the process. For certain people, they can test, live money. If Gov is doing micros, it's the same as, people doing a sim account. Like, there's nothing there, but an Apex is the similar thing, right? It's real, but it's not as scary. But
Yeah, exactly.
it
But
helps you.
you can do really dumb shit, and um, you know, thankfully it's no one in this conversation. I got a message from someone today who was on their 287th Apex account. So the reason is that they don't look at it as real money and they just take insane risks, and it's so you have to make it productive for yourself, and not do what this person does, which is but they're not making money. They're not even getting funded. It's what's the point? And this is an extreme example, but there's sort of the far end of the spectrum too, where people can look at it as, it's the spot to take risks and to sort of devoid themselves of that plan. And that's clearly what this person is doing, is they're not using any sort of plan. They're taking discretionary trades that are based on magic or whatever it is that think they're seeing that they're clearly not. and it's not working. And so something's got to change there, right? If they want to succeed. And I think that that's the trap that some of these prop firms can get you into too, is that, you know, you can get into habits of taking risks that maybe you would not take if it was a live money account, and train your body sort of bad habits. And I have seen that and talked to people who have gotten into bad habits because of that, because that's not something that works for them. So it's there's the far end of that spectrum too.
Yeah, but those people aren't taking it seriously, and they're not treating the market with the respect it deserves.
They're
You
not going
know,
to succeed long term, and
well, and
but
they're living
I
in a
think
world
what
of
they're
bullshit.
doing,
They don't have a plan, and you're going to hear
they
me
don't.
just for the millionth time today. They have no idea what they're doing. They're living in a world of bullshit. And they're completely emotionally trading, and they need to go and find a system that works, test the system that works, practice it in a safe environment, and take steps up until they're able to make the money. But that's exactly what I was saying, and I don't want people to be in that situation where they have all these resets and they don't have any funded accounts. You know, if you have 20 funded accounts and you blew 100 accounts to get there, sure, it easily pays for itself. But like, that's not going to be the situation that we're going to be talking about here, right? It's going to be the nonstop. I've done 100. I have never funded because they just don't. They just will just jump in. No structure, no plan, no idea what they're doing, and they don't even have a reason for doing what they're doing. It's not
Well,
just
their reason
emotional;
is
it's random.
their reason is they're following other people's trades, not understanding other people's plans, and then sort of thinking that they're going to get some magic results. Um, and again, very extreme example that the people in this conversation right now, I don't believe there's anyone that would do that. But you know, don't get sort of into that trap of, oh, it's only $40 to reset. You know, therefore I can deviate, and that's not the point. And I was sort of piggybacking on exactly what you were saying, was that, you know, it is a spot where you can practice things and develop a system for little money, but still have the reward of, hey, maybe this does work. There is some sort of reward there, so it's not for nothing.
Yeah, I mean, I think Apex has its benefits, you know, but don't be that guy. And
Yep.
if you don't have something that you've tested, that you worked, that you can at least prove to yourself that, hey, I can recognize this and I can push a button in the safest environment possible. Until that happens, keep your wallet or keep your credit card in your wallet. You know, don't pay a goddamn penny. Don't give the market makers a penny until you can prove it in a scientific fashion. Model your trades around risk. Have something that's a setup, you know, have a trigger for entry, which is a reason beyond having just a arrow appear or a Bollinger Band touched or a standard deviation touched or a fib level touched. So what? Trades
Everybody
like
needs to understand that the algos understand every fib, every Bollinger, everything. They have all these levels. So all of us need to understand we have no edge. So how do we create edge? We look at larger time frame areas. And we look where there's ever the ICT guy calling it wicks, but they're wicks. Those are rejection areas or acceptance areas. Those are algos working. And then when we go to larger time frames, the trend lines kick in. And we have the trend line algos. It's about understanding those levels. And and what amount of money that, not about money, but it's about your size. Like, what is my risk? Because if the algo is here, I know outside that 2 or 3 points, wow, am I going to get stopped out? Because the algo is going to know that. Maybe you need to go 4 or 5 and you reduce your size. You know what? This is a completely different game. So, anyway, that's all I got. Sorry. I mean, that's like short and sweet. I have to go button up a tree that fell on my house.
I think there's an important thing we're missing with Apex, though. Like, I'm not on Apex. I know a ton of you guys are, but that's because you're also experienced in Apex, and I think you know what you're doing. There's a ton of people who are on Apex because they have this idea that they're gonna get a 100-point runner on the NQ or ES, and they're gonna hit $1 million because it's not their money. They pay $80 to borrow someone else's money. And I was explaining this to somebody else. In finance, we have opportunity cost, and it's the money you're leaving on the table trying to trade something that you have no idea how to trade. And somebody just told me they blew 12 accounts. I know somebody else has blown more. But like, they missed out on a great options trade that I gave them that would have netted them 70%. And instead went after Apex and lost 10 of their accounts. And that's, to me, Apex is creating a lot of money for Daryl or Darnell, and a lot of missed opportunity costs for people who should be happy with 70% in a day gain. I mean, for Pete's sake, the bank gives
What
you
it does is it creates over traders.
It creates over traders, but it also creates a false sense of security because it's not your money. You can just blow the account and it's $80 and you get to reset. And I think it's taking money away from what you actually could be doing, which is trading money and making money. That, like, there's an opportunity cost with Apex that I can't get my hands on. Like,
I've got a hold on. I got a question for you there.
It's very simple to me. If you treat it like a video game, you're gonna fail.
Yeah.
Right? It's kind of like if you're, back in the day at an arcade, right? You're playing a game and then you put more money in. You put more money in and you put more money in. If you're gonna treat it like that, you're screwed. But if you use it to have proper way, right? Which is you have a process and you execute, that's a different story.
Oh,
But if you're
absolutely.
Guys,
Absolutely.
you know what? Let me jump in here. There's a completely different thing when guys have been doing this for a living for how long?
Exactly. Yeah.
I mean, when you have people that are trying to make this a living, what I just heard, I get it. But it's like, okay, it's like, all right, am I making 180 grand a year? And I'm trading on the side, I'm providing input, and I'm like juicing my trading account for a couple hundred grand. Come on, let's be honest here. Are people trying to make a living trading? Are they supplementing their accounts? I think that is a key thing to acknowledge. It's like, folks, where are you? What are you doing? If you've got, you have to define your level of risk outside the income that you bring in the house and what you're trying to do. And what a lot of us do, I've been doing this for a long time. Neil has. I mean, a bunch of us have. You have to readdress things. That is a completely different risk alignment because the audience doesn't get it because they're not in the same position. And I do try to, I've been doing this all the time and it worked out pretty well for me. I know it's worked for John and Neil and a bunch of other guys. But we're at a time where you have a different audience.
Yeah.
And my view right now is the 60-foot fucking tree crossing my driveway. And I want the guys to cut this fucking tree down. Thank God it didn't crash on my house. I'm telling you guys, I'm sitting in the driveway as we talk. and I'm staring at this. So, good luck.
But no, I
I'll
think,
hang up.
but Gov, I think you've hit it on the nail. Though there is a lot of you who are experienced, who can manage the risk, who know what you're doing, who like Aaron and you and Neil and all these guys, Scoob, like you guys have been doing amazing things with Apex and whatever, right? Like you have your system and you're doing it. The guys that
I'm not
the
on
guys that I'm
fucking
talking to, you know, they have zero idea. They just think, oh, it's $80 to fund an account. I'm gonna go ride this thing up, and you know,
Exactly.
and
Exactly.
it's and to me, it's like, okay, the way I look at it, and I call it opportunity cost. I'm trying to stay in the lane that I know. And if I miss making money in the lane that I know, then I have zero chance of making money in the lane that I have zero idea in. So I trade futures as well, but I'm just saying it's like for guys who barely know options, who are trying to get into futures trading, what are you doing? Like the opportunity cost of you just missing out 50% on a simple trade, you know, you just missed out on a 50%. Trying to make what on an ES trade? So my only thing is like, I think for a lot of you guys who made it a living, it's fantastic. It works for you. There's so many new players who have zero idea about even the simple part of the market, who are trying to get into futures trading because hey, it's available now to everybody, and it's like, hey, let's go blow up 20 accounts. I don't know.
You know
It's
what?
it's a weird thing for me.
I love what you said there. I love what you said there. And it's like, because I've got a bunch of friends that are trying to dial in, and, you know, I'm not interested in retiring right now. I'm trying to expand my business. So I'm trying to learn more. So when you guys introduce these new ideas, I'm all in. I'm just trying to assimilate everything that merged with the newcomers that come in. So it's like a balancing act, you know? It's like, I mean, you never want to make a cocky comment, you know, that you did this or that. I mean, I try to keep that like tight. It's like there's a lot of people that there's tough trade.
Someone's out with a crowd right now.
Yeah, somebody's clubbing.
AD, manage Mike. Probably Scoob going into the bar. It's not me.
It's got to be Anthony and MC.
Thanks, AD.
somewhere.
I think I was able to mute him. Is that better for everyone? But
Yeah.
so I think there's a point that JD you may be missing, and you know, I think that options for many are that are human, unlike you, are a very, very tough instrument, right? So I think what futures does allow for people is the ability to trade something in and out like it's a penny stock, right? And I think what people are trying to do and is find something that they can trade and have a plan. It's very hard, in my opinion, and I'm just one person, to have a trading plan with options when every option, every strike, every expiration is different. Every strategy is going to be different. And say you have 10 different strikes of 10 different tickers in your account, and you have to manage your sort of your trading plan individually on each one based on your time frame. That's a lot for normal people like me to manage. So what I think futures allows is it removes that from the equation, right? It brings it back to being a little bit more simple. And
Right.
I think
Right, Aaron. Sorry, I just use options as an example because I traded. I'm saying people who have to go and simplify their trading down to the equities level. So don't play options. Don't do options. Don't trade options. Do equities. Know what you're doing in the market, and then move to an ES or an NQ.
I think that's fair.
Because if you can't trade a stock, there is no way.
That was perfect. That was exactly correct.
And I think that that's a great point, because I mean, people forget a lot that futures are a leveraged instrument. So you are still trading a leveraged instrument. It's not as leveraged or as volatile as options, but it's sort of like it's they're very similar in the amount of leverage that they are. But I think that you're spot on. Is go trade equity, go trade sort of charts is what you are, because options, in my opinion, unless you're playing with dailies and weeklies, you're not trading charts as much as you are with futures, right? You're trading a whole bunch of things that all need to come together. And I think that bringing it down to that sort of most simplistic form, which is trading an equity, is absolutely spot on, where you can sort of hone that plan. And I think you're right.
So the
Yeah.
differential is the learning curve between the average person thinking, oh, I can go trade options. Oh, I can go trade futures. They do not understand the level of risk in between. They get caught up in the fast buck. And this, man, it's like that is a road to disaster. Holy moly.
Yeah, don't, it really comes down to find something that works. Find something that's repeatable, you know? Don't make it overly simplistic. Like, I see arrow, like, at least have more criteria, right? Look for some type of change in pattern, something, right? But take it seriously. More importantly, it doesn't matter if your futures op doesn't make a difference, right? They're all instruments. They're just different leverage. I mean, futures are much simpler than options, because options they have all the Greeks and they matter. You have different expirations. That matters too.
And you're rethinking time.
Yeah, it's really, you have so many different components, right? The component of volatility, which, god damn it, watch that VIX video. The VIX is not directional. Like, if VIX up doesn't matter, it really will blow out at certain times. It's a derivative of a derivative, and it's a hedging instrument. So it's not going to be like a normal chart. It's just, you can pretty much ignore VIX by and large. If it's blowing out, sure, pay attention. But even then, like, if you look back in COVID, we went through the roof on the rally the whole way up. It took like a year before VIX was under 20. Over a year, and the whole time we shot straight up, because it's a direction. It shows how much it's going to move. So if you're going to trade options, take them seriously. Learn your Greeks. A doctor just doesn't walk in and, off the street, no training, and start cutting people. Scoob's not going to bring me into Micron to make RAM. Like, I don't know what the hell I'm doing. It would be the stupidest shit in the world. But no, it's trading, and I'm going up against the most brilliant mathematical and statistical minds in the world, because they make way more, being a Goldman Sachs partner than they do working for Deere or somewhere else. You're dealing with the elite, your MITs, valedictorians, your literal math geniuses, so take it seriously. It's not a joke. Have a plan, know exactly what you're going to do, and follow your plan, or you're going to be killed. And I'm telling you, everyone that doesn't heed that advice is going to blow up. May not be tomorrow, it may be a year, but if you don't have a plan, you will blow up. Pick whatever tool you want. If you have something, come up with something good, test it, and do it. But whether it's Apex, whether it's a simulator, whether it's options, whether it's your real account, trading futures, it doesn't matter. It's all the same. It's not a game. It's not a joke. This shit can ruin your lives. I've seen multimillionaires end up serving me burgers. I shit you not. Literally. I've seen grown men cry because of what this thing will do to you. So make sure you listen to all that advice that was given out. All the stuff JD and Dan and Gov and everyone else that chimed in, because this is serious shit. But if you do it right, it's the greatest thing in the world. But you're swimming uphill or swimming upstream. I mean, I don't know how you swim up a hill. That'd be pretty ridiculous. But, you have to make sure that you have a plan. Okay. So I have some homework for everyone. Imagine if when you're coming up, I want you to come up with a plan. Okay. I want you to have clearly defined reasons for entering a trade based on a clear setup and then some type of trigger. Price doing this, arrow doing that is not enough. So come up with a trigger. You need a reason to enter. And if you don't have that reason, you don't enter the trade. I want know where you would get out of a trade and make it repeatable. It could be a certain amount of price. It could be a certain level, like a VWAP. It could be other conditions, whatever it may be, and and then go and test it. Take the time to go look at your charts. I can't even tell you how much time I spend in a week staring at charts, looking at different things, seeing what can work with a risk reward, sense. Is there things that I'm missing? What could I get better at? But at the same time, I don't want to change what's working, but go and figure out some type of plan and do it as if you're programming like an algorithm, meaning that, a computer isn't going to do what it's not told. So it has to be comprehensive. Like I said, with a stop, you have your initial stop. How do you manage your stop as you go along? How do you manage your targets as you go along? Like, make it full and complete, as if like you were going to have someone else trade this plan for you. But you have to tell them every single little detail that goes into it. So I really want everyone to do that because it's going to be the best exercise you've ever done in your trading career. And you're going to find out why you're emotional at times, because you're going to have these gaps where you're in the middle of the action and you have to make these decisions. So we're going to eliminate all of that shit. Okay. You can use the Jimmy's chart. You can use your own chart. You can do whatever, but you have to do this. Every single person. It's the most important thing. It'll be the best exercise you've ever done in your life. Because from that point on, everything you do will be fully thought out. It'll be proven. It'll be tested. It'll be repeatable. And you can trust it.
And sometimes when you've been doing this for 30 years, you will find your best friend was, I'm not seeing things right. I took a stop. Wow, I just had incredible consistency. But I need to back off. I need to go to the gym. I need to just take a little time off. And
if you can't
execute, Neil keeps talking about fresh eyes, and it's like that's kind of my gig, and that the fresh eyes has saved my ass. Guys, there are so many opportunities in the market. The worst thing is when people think I'm going to miss the next thing. No, you're not. No, you're not. The next thing could have been a disaster for you. So you chill and wait, and you wait for your mindset. I mean, an abundance of the people listening is like, we were all former athletes. It's like, I mean, talented at things that we did and we do. It's the same thing, man. Anyway, that's all I got.
Yeah, if you can't execute your plan, then
That's it.
walk away.
Walk away. I did it this morning. I talked about it.
Yeah, and
I walked away. I mean, I had my thing, and I just was not seeing things straight. I was not. I was missing my tells. I was not watching the Russell and my other key indicators. You know what? I just wasn't, and I was frustrated, and I was pissed off. Yeah, forget the freaking tree. I mean, I was pissed off, so I just had to like shut everything down and completely walk away. I mean,
if you can't execute, run. Nothing good happens when you trade poorly.
There you go.
You know,
there you go.
you can get lucky, but like Dan was saying earlier, like you can strike gold by being a dipshit, but over time, you're gonna end up way negative doing that. The
Right.
market will teach you its lessons. You know, I kind of equate it to the ocean, right? You can have a lot of fun in the ocean, right? You can go to the beach, you can go swimming, you could go scuba, snorkeling, go on a boat, go on a cruise, whatever, right? But it can kill you in an instant if you don't treat it with the respect it deserves. If it says rip currents and you're like, oh, I'm going to go swimming, it's going to beat you. The market is the same. It's bigger, stronger than you, and it can eat you alive. And it won't even notice that it did it. It's just chewing things up. It chews people up. So, you know, that's where what the whole point of tonight was, is to try and avoid that. And, you know, the way to do that is to really have that complete plan and execute that plan. And if you can't execute it, what are you doing? Do something else.
So I've had a lot of times where I go to Vegas
Mm-hmm.
and I don't trade. Rather, I'm sorry, I don't gamble. I play golf. And I've got a buddy of mine, a classmate of mine, grew up, whole family, Reno tables, everything. And he goes, I've got a strategy that's worked within my family on the craps tables. And he goes, so here's the key. And he goes, I have a formula. You know, I understand the game. And I wait for when things run. And when things run, I apply those odds when things are running. When things are not running, I do nothing. I leave. I don't just trade out of the blue because I think I want to get long or short. We wait for setups that are going to run, and we try to apply those probabilities. And if we're uncertain, we reduce their size.
Mm-hmm.
So there you go. I can tell you, I've been to Vegas and, you know, not gambled more than I have. So whatever. All right. I'm talking too much.
I gambled a lot in Vegas when I used to go. I haven't been.
Yeah, I don't do that. I'd rather go. I'd rather go play golf and have a good skins game, and I'll take everybody in.
Yeah, or you.
Well, then again, I don't know our audience.
But now you can't really do it now because they have the different. You know, they don't do the old school like 8-12 decks in a shoe. You know, where you could actually count cards. Now they have like the automatic shuffling machine, so
Yeah,
it ruins all the fun. But yeah, it was fun while it lasted. It was always.
it was.
I spent way too much time in a casino, but there's only two casinos that I consider that owe me money. That's the Bellagio and the it was in Windsor, Canada, the Casino Windsor. So one day I'll have to go back into JD's territory and reclaim my.
I've been up there. Oh, that'd be good.
Well, maybe we'll do a Toronto.
Canadian money is worth nothing, guys. Just so you know, Canadian money is worth nothing. Okay, so don't bother coming up north.
But you know what? What the only thing that
It's
the
the
only
cold,
thing
not
that
the currency that'll keep me away.
the only thing
I-
that the hey guys, hold on one sec. This is Gov, and I'm gonna sign off. Everybody else can do their thing. I strongly believe that if you develop your confluence levels, and I'm telling you off your entries, if you don't get a couple scales, you should be out right away. You should be out right away and reassess. Doesn't mean that you're not trying to you're massaging it, that area, but you should be dialing in on rejection areas or acceptance areas. And there's a ton of data that supports these areas, and the algos respect these areas. So I would just give that some thought, because
I think
when
that
you
sounds like
enter,
a topic of for one of these
what's
talks.
that?
I think that's some of your levels and how you come up with them and how you execute them would be a good topic for one of these talks.
All right, sounds
I
good.
agree. I agree. I think, David, I think you've said you'll be able to do one in a couple weeks.
Yeah, definitely.
Good, good. Well, Rise to Fame will be in touch to make sure we've got that on the calendar. And we are a bit over tonight, but Neil, thanks so much for taking the time and giving everybody a good talking to, every single one of us, regardless of how seasoned we are, how successful we are. I think we deserve a good talking to every now and then to keep our shit together.
You
And
know what? Neil gave us a good lashing, and that was awesome.
And
I mean,
yeah.
it's out of love.
it was good. It was out of love.
It's 100% out of love, and I literally have seen, my old boss was making a couple $1 million a year plus, right? And a few years later, he's delivering shit at FedEx, right? Like I've seen,
Yep.
this other guy was making millions, like big trader in the pit. And one day I was hungover and I went to this burger place that was, just down the street from me in Chicago. And I walk in and I see Bob behind the counter. I'm like, what the fuck? And he was the one that cooked my burger and took my money, and rang me up. Like it was insane. It's so I guess the last thing is, be smart with your money. If you made a lot of money in COVID, good, bank it, put it away. Don't try and catch lightning in a bottle twice. And know that if you have life changing money, don't let it change your life twice, right? By having it and losing it. And that's one of the ways that can take people out of the game too. So if you've done well, keep it.
All about
and,
risk management.
and have a plan. And come to me with your plan, and I'll help you work with it. Because when you go through it the first time, you're gonna miss stuff. There's gonna be things you don't think about, and if you can have all these things thought out, it's really gonna change your trading forever. And when I don't have a plan, I'm not gonna do well, and that's gonna be the
Totally
same
agree.
for everybody.
Totally agree with what Neil is saying there. I mean, one of the edges that I have is a former floor. It doesn't matter what I bet. I have a lot of reps, but the moment I'm watching the price action, and if I'm not seeing it go that well, I mean, I'm already trading out. I'm already out. I'm watching. I'm trying to finesse a level. Not everybody can do that. It's
No,
like,
you know what
it,
you're doing.
it,
You
it
practice
is.
it.
I do. Well, I practice. I have the reps,
But
but
the way to
when
do
we
it
talk
was to
about in the
get with
room
your
and we post and we post a trade, it's like I don't want to be misleading. It's like I probably should have in parentheses, it's like I've been working this little level a while, but I think I provide context. I'm looking at this, much the same as Dan does. He does the same doggone thing. It's like you're looking at it's an area of interest. If you have too tight of a stop, you're going to be out. You could be on a 1 lot. You could be on 20 micros. This is not that thing. You have to adjust. This is the risk management part. You have to adjust your size according to the area of interest. And then you see how it plays. And then, and only then, you can make it a binary decision. And then you go, and if you're stopped out and doesn't work out, that's fine. It's all good. Every single day, every hour in the day, that's all I do. I know nothing, but I'm
No,
tired.
you know a lot. You're an incredible trader, and
Yeah.
no, you are. But
You know what?
But you have a
Enough of
system,
that stuff.
and there's
I
you
have
do things
enough.
for a
No,
reason.
but enough of those accolade shits. It's like I put in the reps, and it's like, This is why I want to be in this room, because we have so many different people, so many different backgrounds. I mean, you don't necessarily get the like on a comment or whatever, but I'm noticing comments with a lot of people. I was like, what are they looking at? It's like, oh, I'm looking at all these different things, but it's about us trying to. I want to throw out things that I've learned, and you're trying to throw out things you've learned, and it's like it's not about, dude. You could have made $1 million yesterday, and you could be out 2 million today, and that happens in margin markets. So the market doesn't give a fuck. It doesn't know what your last trade was. It doesn't give a shit. And people wake up. The market does not care. That was the best thing I learned a long time ago. The market does not respect you at all.
Owes you nothing. In fact, it wants to kill you.
Owes you nothing, and it's going to slay you to hell.
Mm-hmm.
Nope, but
So
it's like the ocean. You got to respect it.
You have to use math on your side, right? It's probabilities, right? And that's what it is your risk reward. How much do you make when you're right? How much do you make when you're wrong? How much risk do you take? And what's your batting average? How often you right? All that stuff is going to determine whether you actually have something. Otherwise it's just guessing. You're guessing up or down.
Folks, if you get in a trade, if you don't get a quick scale, get the fuck out. That's all I got.
Reduce your risk, manage your risk, and have
That's
that
all I
thought
got. That is the one thing that has been saving my ass, and I've been able to scale up since I've been trading the markets off the floor. That is the one thing that has saved my ass and allowed me to be in the game. And when Dan talks about a couple of things we went through, months ago, and Braden, those were the things that we were talking about. It's about it's like being at the plate. And all of a sudden you foul whatever. You create a situation where you can get an extra 2 at bats. That's what the quick scales are. And if you can't get them, get out or reduce your size. And that allows you time to figure out your game plan. I'm beating the drum, right? For over a month, right?
That's what matters, right? Reduce your risk, manage your risk, know where you're getting out of a trade before you get in.
That's it.
If you do those things, you're just guessing, and you're just purely saying, I'm going to trade on emotion. It's like saying, I'm going to drink a fifth of whiskey and then drive around. It's a bad idea, folks. You know, you got to think things through. And the best time to think it through is beforehand. Kind of like football, right? Like they're going to have a game plan. They're going to study all week. They're going to get things ready. You know, we do it daily, but it's the same thing. They go in with a plan. They need to adjust their plan.
Hey, that's true. And you know what? So I'll conclude with this. It's like I mentioned earlier, and I'll keep it brief. Completely off my game. You know, we were like talking about the Renkos. We were talking about this and that, and you know, I had the UB loss. It's like, folks, I'm not used to losing money. It's like before 9-10 o'clock, I at least have money in my pocket. So I have to step back and just readjust, you know, kind of what's going on here, because you know, I've got a game plan that's been very consistent for me, and all of a sudden a few things got off, and you know, it's like I'm at a recess. So we'll talk to you guys in the morning. Sorry, I didn't mean to talk too much. I apologize.
Oh, thank you for everything you shared. It's always speak when you have a thought. No need, never hold back.
All right. Well, thanks, guys. We all appreciate it, and I think that we've got some more talks scheduled. I don't know about next Thursday, but I think the one after. We're trying to really do the official ones every other Thursday, so that we don't come at you too much. But I really appreciate everybody being here, and I think we've just got an amazing community and real sense of everybody caring for one another and wanting everybody to succeed. We can't keep anybody from stepping in front of a train, but we'll do our best to tell you when it's coming down the tracks. And if anybody needs anything, always reach
that should
out.
be Dan's job.
What's that?
I said that should be Dan's job to keep us from stepping in front of a train.
Yeah, actually, I shouldn't have said that with Dan in the room. Sorry, Dan. But